Have you ever noticed that the less money you have in your bank account, the more expensive the world suddenly becomes? It sounds like a bad joke, but there is a strange, silent tax on everyday life that only applies if you are struggling to get by. Today, we are going to look at the hidden costs of being broke and how our financial system actually charges people for not having money. This is not about bad spending habits, buying too many fancy coffees, or failing to make a budget. This is about structural quirks in our economy that make basic survival cost way more for some people than others. Take something as simple as toilet paper, which is a basic human necessity we all have to buy. If you have $50 to spend at a big warehouse store, you can buy a massive pack that lasts for months, bringing the cost of each roll down to pennies. But if you only have $5 in your pocket today, you are forced to buy a single roll at the corner store, paying up to 4 times more per roll. Over a year, the person with less cash actually spends way more money on the exact same household necessity. This is what economists call the poverty premium, which is just a fancy term for the extra price tag attached to being short on cash. Why should you care about this? Because understanding these hidden traps is the first step to avoiding them, even when the system seems rigged against your wallet. Let's start with a classic example that shows up right on your monthly utility bills. If you have a comfortable buffer in your checking account, you probably set your bills to autopay and never give them a second thought. Companies love this, so they actually give you a discount just for letting them take money directly from your account every month. But if your balance runs close to zero, autopay is a dangerous game of financial Russian roulette. One bad timing mishap with your paycheck, and you get hit with an overdraft fee, which is a $35 penalty for not having enough money to pay for your electricity. To avoid this, many people choose to pay manually, but companies charge extra for paper bills or manual processing. Then, if you are forced to pay a few days late because your paycheck was delayed, the late fees start rolling in. Suddenly, a $50 internet bill transforms into an $80 headache. The credit card companies and utility giants are not doing this because they need the extra money. They do it because they can, turning your temporary cash shortage into a highly profitable revenue stream for themselves. In fact, large banks made billions of dollars last year purely from overdraft and late fees collected from people who were already struggling. It is a brilliant business model for them, but a disastrous cycle for you. This fee-heavy landscape gets even worse when you look at how we get from place to place. Think about how you get to work every single day. If you can afford a reliable car with a solid manufacturer warranty, your transportation costs are highly predictable. You pay for gas, you get your regular oil changed, and you move on with your day. But if you cannot afford a large down payment, you might end up buying a cheap, high-mileage vehicle just to get by. This is where the trap snaps shut. Cheap cars are notorious for breaking down at the worst possible moments, leaving you with sudden, massive repair bills. A single blown radiator can cost $500, a sum that might require you to take on high-interest debt just to keep your job. Even public transit is designed to reward the wealthy. If you can afford to shell out $80 up front for a monthly transit pass, your daily commute becomes incredibly cheap. If you are scraping together change day by day, you have to buy single-ride tickets, which cost significantly more over 30 days. It's the exact same bus, taking the exact same route, but the person with less money in their pocket is paying a premium for the ride. This constant drain on your resources makes it incredibly difficult to build up any savings. And when you have no savings, you are forced to make some very expensive choices when emergencies happen. Imagine your car breaks down, or your tooth starts hurting, and you don't have $1,000 sitting in an emergency fund. For a lot of people, the only option is to look for quick cash, which brings us to the predatory world of payday lenders. A payday loan is a short-term, high-interest loan designed to hold you over until your next paycheck. These places exist on almost every street corner in lower-income neighborhoods, and they operate like financial quicksand. They might charge you $15 for every $100 you borrow for 2 weeks. That might not sound like a lot at first glance, but if you calculate the annual percentage rate, it works out to almost 400% interest. When the 2 weeks are up and you can't afford to pay back the full loan plus the fees, the lender happily rolls the debt over into a new loan with even more fees. What started as a small $300 loan to fix a car engine can quickly balloon into a multi-thousand-dollar mountain of debt. The business model of these lenders relies almost entirely on customers failing to pay them back on time. They make their fortunes when you stay trapped in their cycle, and they know exactly how to keep you there. This system of predatory lending exists because traditional banks often refuse to deal with anyone who doesn't already have a perfect credit history. Which brings us to the next massive invisible tax on being poor, your credit score. Your credit score is a 3-digit number that represents how reliable you are as a borrower to financial institutions. If you already have money, keeping this score high is relatively easy because you can pay your credit cards in full every month. A high score grants you access to the lowest interest rates on mortgages, car loans, and business financing.
But if you were living paycheck to paycheck, one missed utility bill or a high credit card balance can send your score plummeting. Once your score is damaged, any money you borrow in the future becomes incredibly expensive. A person with a great credit score might get a car loan at 4% interest, while someone with a low score might be charged 20% interest for the exact same car. Over the life of a 5-year loan, that difference in interest rates can add up to thousands of dollars in extra payments. The irony is staggering. The person who can easily afford the higher payments is charged the least, while the person who is struggling is forced to pay the most. It's a system that punishes you for having financial difficulties, making it even harder to recover from them. This is not just a problem for borrowing money either. Landlords, insurance companies, and even some employers look at your credit score before deciding whether to work with you. If you have a low score, you might have to pay a massive security deposit just to rent an apartment, tying up more cash that you desperately need. This constant pressure has a devastating ripple effect on another crucial aspect of your life, your time. The final and perhaps most painful hidden tax on being poor is the tax on your precious time. When you don't have money, simple daily tasks take much longer to accomplish. You might spend 2 hours on public buses to get to a job that would take 20 minutes to drive to in a reliable car. You might spend your Saturday morning waiting at a laundromat because you can't afford an in-unit washer and dryer. This is valuable time that you cannot spend working a better job, learning a new skill, or simply resting with your family. So, how do we survive a system that feels so heavily stacked against us? The first step is to recognize these hidden traps for what they are: structural designs, not personal failures. Once you see the pattern, you can start making strategic choices to protect your hard-earned cash. This might mean joining a local credit union, which often offers fee-free checking accounts and lower loan rates than traditional corporate banks. It might mean finding a trusted neighbor to buy household items in bulk together and splitting the cost. It might mean setting up calendar reminders for your bills to avoid late fees, even if you can only pay the absolute minimum amount on time. Small, deliberate shifts in how we handle our daily transactions can help plug the tiny leaks that drain our bank accounts over time. It's not an easy journey, and the system is far from fair, but taking back control of your money starts with understanding how the game is played. If you found this helpful, subscribe for more honest talk about how money actually works in the real world. Remember, this is just a friendly guide to navigating our complex financial world, so always do your own research and take care of your wallet out there.